What's up, everyone? Excited to give you this video today about Getty Images, which is the #1 ranked candidate for a short squeeze on Fintel, which is a very reputable site that basically puts out financial information and data, and it basically compiles a bunch of short interest data to determine which stock is the most susceptible to a short squeeze out of the entire market. And it's very interesting to see that Getty Images is the #1 ranked stock for a short squeeze. So very interesting there. Obviously, everyone knows that this is a pretty short squeeze heavy name, and a lot of people talk about that when they talk about the stock. But it's definitely good to see that a huge firm like Fintel is ranking Getty Images as the #1 short squeeze candidate. So short squeeze is definitely on the side of the bulls and is seeming somewhat likely. But with that being said, you can't get a short squeeze without a massive amount of retail volume and just general chatter throughout Twitter, stock twits, and really Google as well, right? Because that kind of combines it all. So this shows you how many times Getty's ticker was searched in the past 5 years. So as you can see, we topped out at about in July of 2022. So that was obviously when shares were rocketing higher. But it's interesting to see that we're only at 30% of that search volume that we were at back last year in the summer when obviously shares were going crazy. So with that being said, if we could get the search volume to kind of come back, that should definitely help push shares higher and possibly cause a short squeeze, which is what Fintel, a very reputable company, is suggesting with that score. So with that being said, I will jump into the charts and try to figure out where this stock is going. I will give a price target. As always, this is not financial advice, so please do your own research in D&D. But when we look at the chart, we see definitely a firm support level around 470, 490. This is where shares had bottomed out in early June. It's where shares had bottomed out in April, where shares had bottomed out earlier in the year, January and December. It's also where shares had bottomed out in October and November of last year. So definitely a pretty firm level. Obviously, we fell below it, back here in March when there was a lot of craziness happening throughout the market with the whole SVB stuff. So I see that as kind of an anomaly, and I would say the general support level is from 470 to 490. With that being said, it looks like we have fallen below all daily moving all daily moving averages today. Unfortunately, as shares move lower, so we're below all daily moving averages, and what that really tells me, is that momentum is not on the side of the bulls at this current time. Doesn't mean that it couldn't change very quickly, especially when you have a name that's such a short interest candidate as Fintel is already kind of laid out for us. And also you can see that the last time we tested this level, we were oversold according to RSI, which likely led shares higher. So if we get another move down to this support level around 490, 470, I will be buying some calls, especially if we have an oversold condition on the RSI, which is an RSI of 30. So what is going to make me, buy some calls, add some leverage to my position here is if we come down to about 490, 470, and we see RSI oversold, I will be buying, putting on some calls, for the upside, which could be, about $6. Or let's say, shares really start to move higher, we really see some more interest, and we take over this 200-day moving average, which currently sits at 670. Well, if we crossed above all moving averages, that would definitely be a sign of bullish momentum. And I would think shares would probably move up to $8.15. This 8.15 level is pretty firm resistance. It's where shares had topped out on April 24th, and it's also where shares had topped out in February 7th of this year. So if we were to bounce off support, get a move around, $7, I would definitely be cutting around $8. As that's just where shares had, topped out in the past. Also where shares had bottomed in July. So, as you know, or maybe you don't if you're not a technical buff, but past support becomes a new resistance and vice versa. So this $8 level is a firm resistance level. If we move down to $4, I will be buying some calls. With a price target of about 580 to 6, and then I'll probably hold like a quarter of my position until we hit this 200-day moving average at 260. And then, let's say we consolidate a bit around here. I may even get back in to ride it up to 8. And obviously, if we broke this $8 level, that would be extremely bullish for the stock. So some levels to watch, do your own research, make your own determinations here. But that is some clear cut and easy, charts, easy levels to see on the chart. So definitely keep that in mind, set an alert for yourself, and, watch out for these levels. But with that being said, I will jump into some seasonality trends. So obviously only 2 years here of trading data, but shares in June and July tend to do very, very well for the stock. As you can see, the best 2 months on record are June and July. And when you consider that, shares haven't had the best June so far, so that's likely, pushing numbers down as well. So June, July seems like a very, very bullish seasonal, kind of pattern for the stock. And then obviously in the fall, it seems to be quite bearish. But with that being said, obviously only 2 years of data here, but, definitely something that kind of, can back up and, give you more confidence if you end up adding some calls around this support level at 490, which is what I'll be personally doing. And if you want to get my daily portfolio moves, you can join the Discord below. But in terms of news that's kind of been driving this stock, so they kind of deal with NVIDIA. Basically, NVIDIA obviously known for their AI chips and their involvement within the AI sector, but where Getty kind of comes in is they have so many images that can be used for generative AI to kind of generate data and pictures and content off of. So they really do have a great amount of data that they can share with these AI companies to kind of help them generate better pictures, content for creators or whoever may be, wanting to generate content off of, real life images. So Getty has all those images and definitely has, a leg up in that space. So when it comes to generating images, I think Getty is going to have to be involved with AI because they just have more images than really any other player that's on the stock market right now. So very good sign to see them in this kind of growthy, buzzwords, whatever you want to use. But every single earnings call you listen to these days, someone's saying something about AI, right? But Getty actually has a role to play with AI. I would say more than many of the companies that are speaking about AI. So great to see that. That's really a sector you want to be in, just given all the interest. And then two kind of negative things to point out here. So over the past year, we've seen a lot of insider selling. So basically, insider selling is just trading by directors and management, the C-suite, right? The CEO, the CFO covers all that. So we've seen some selling over the past year. Not the end all be all, but it's definitely not the best sign when you see people that know the company better than anyone, because they obviously work in the company and they're selling shares. That's usually not a great sign. Doesn't mean that shares are going to fall off a cliff in the next 12 months, but it's definitely not a positive sign. So be cognizant of that. And then when we look here, so I I kind of call this a bearish signal. But we do see Jim Cramer put out a recommendation, a buy recommendation for the stock just last week, so last Monday. So not great right there. Don't love it. But I mean, at the end of the day, it's not the worst thing in the world to have the stock be talked about on CNBC. And let's say, shares go up 10% in a day and they start talking about it. Well, guess who's going to come out and say, I told you so, and probably talk about it even more and be more inclined to mention it, to continue to mention the stock? Well, it would be Jim Cramer. So, you can kind of take that as you will. I know a lot of people will say, "Oh, shoot, well, I gotta sell my shares now," but take that for what you will. But with that being said, I will jump into the fundamentals of the company. So this is Seeking Alpha, which basically just puts all valuation metrics, growth metrics, profitability metrics, momentum revisions, and they compare it to the peers within the sector. So I love using this because it's so easy to kind of compare valuation and all these metrics to peers without having to scroll back and forth between financial statements. You can all see it very easily here. So with that being said, let's jump into it. So they do have a D grade for valuation, and when you look at it, you can kind of see why. So obviously right now they're not profitable, but they're expecting to be, they're expecting to have a 38 times PE over the next 12 months, and the sector median is 14. And just to give you guys some context, it's over 20 right now in terms of the S&P 500. So definitely overvalued when you consider the market. Obviously, AI growth and all that stuff is why investors are overvaluing it compared to the market. But definitely worth being at least aware of that. And EV to EBIT, 19 times compared to 16 times, for the general sector, which isn't too bad when you consider, the growth potential. And this honestly, it isn't bad either. Price to book ratio of 3.4, and for those that don't know, that basically just means the market cap is 3.4 times the book value or the assets on their balance sheet. So that's not horrible compared to about a 2 times for the sector median, which this is a growthier stock for sure. So I would say, it makes sense for the stock to be kind of over all of these metrics. So yeah, not super shocking that the valuation doesn't look good. But this one was a little more surprising, honestly. So year-over-year growth is about flat, when the sector median is about 5% growth. So that was kind of disappointing. I thought that would be a little better. But obviously, the whole AI deal with NVIDIA and the whole AI craze is really just starting. So hopefully that continues to be a growth driver for the company, and we can see this revenue growth, start to jump over the coming months. And then I will go over revisions. So this isn't a great sign, honestly, to be frank. This looks pretty poor. But so just so you know, this is analyst revisions. So basically this means a revision is when a covering analyst changes its EPS or revenue expectations. So basically at Morgan Stanley, Goldman Sachs, there are analysts that are specifically covering Getty and its peers, and making predictions for their EPS and revenue. And they change those predictions based on company-specific news. It could be, general market news. It could be news on the consumer. Let's say the consumer is looking weak. Well, they might move their expectations down. So as you can see here, they moved EPS expectations down. 3 different analysts did that. And then 6 different analysts moved their revenue revisions down. So what does this tell me? This tells me that Wall Street is becoming a bit more bearish on the stock over the past 3 months. And this like any metric, you can't look at it in a vacuum and expect to be able to make predictions on a stock or a company. Um, but it definitely is worth noting that, analysts on Wall Street have become more bearish on the stock over the past couple of months. So, like I said, not the end all be all, but definitely at least be aware of this. So you're the most informed investor as possible. With that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.